All right, welcome guys. In this video, we are going to talk about what premium and discount pricing is. Here we have a nice clean bullish example in front of us where price is moving in a bullish structure. It just swapped out the previous low's liquidity and then it broke the high point on this line. Meaning we have a new structural protected low point here where we can pull the Fibonacci from up to this high point. In the previous video, we just added 3 more levels into our Fibonacci retracement tool: the 0.5, the minus 0.27, and the 0.618. Out of these 3 levels, we have a premium and discount pricing indicator basically, which is the 0.5. It halves the whole level into 2 equal sections, right? So in between the 0 and in between the 1 level, we have the exact half of this, which halves the section into a premium and discount pricing region. Above the 0.5 level, obviously in a bullish example only, above the 0.5 level, we're going to find premium price ranging. And then below the 0.5, we're going to find the discounted price. What does this mean? It means that something, an asset, a car, a stock, a currency, a grocery, anything that has a value, anything that has a price tag, it means that it's way too premium for that pricing. It means that people are less likely to buy into that thing, to buy that asset, to buy that car, to buy that currency, to buy that anything that has a price tag, because it's way too premium in pricing for the value they are getting. So for example, here on this chart example, let's just assume that this is a Forex currency pair. In the premium ranging price, people are less likely to buy into that currency because it's way too premium priced for the value they are getting, meaning they are expecting it to drop down into a discounted region where they can buy that currency. They don't want to pay that high for what they are getting because it's premium priced. And once it arrives into the discounted pricing region, they will buy into that asset because they will think that, yeah, this is good value for my money. I'm buying the exact same thing. I'm buying one currency pair, for example, EuroCAD. I'm buying one of that. And for the price that I'm experiencing here, it's way too premiumly priced. But when it comes back down to the discounted region, below the 0.5 level, it will be discounted priced, which means that people, investors, banks, retail traders, you, me, we are going to more likely to buy into that asset, into that currency pair, into that car, into that grocery, into that Apple, anything that has a price tag. This is what premium and discount is. This is the theory. But how can we use this? Simple. It's really, really simple. Just like I explained it with the theory. People are less likely to buy into something that are in the discounted pricing, right? So what does it mean? It means that most likely when price, for example, in this bullish example, creates a structural low point, protected low point, break of the high, we pull the Fibonacci from here to here and the retracement starts there. It means that when the retracement starts, it has a higher chance for this currency pair to come back down to the discounted region before continuing to break the structure to the upside. Why? Because less people, less investors, less retail traders, less you, less me are going to buy into that currency pair because it's in the premium ranging, and it's less likely to continue to break the structure to the upside because it's way too expensive, it's way too premium. So what investors are waiting for is to dump down that currency or car, grocery, once again, anything that has a price tag, into a discounted region where they get the same product but for less money. So they get more value for what they are paying. They are entering here on the discounted region, anywhere in between the 0.5 and the 1 level. They are entering in a trade, for example, on Forex currency pair. Entering in a trade, they are getting the exact same thing for their money, but with more value, because if they are entering here, the more money they will make on this movement than on this one. It's discount priced, it's premium priced. So how we can use this? By simply assuming that price will drop down to the discounted region when you pull the Fibonacci from this low to this high point. And you are lining up with this perspective with the previously explained 4-hour 50-minute alignment, and comes back to the logic that where price retraces, it's going to most likely come back down to the discounted region where you're going to take the reversal retracement trades, right? You are taking the opportunities, 50-minute bearish opportunities, coming back down to the discounted region. And once price reaches the discounted region, you're going to assume that price is going to skyrocket from here because people are more likely to buy into something that is in the discounted region than it's in the premium region. So discounted region means that people are more likely to buy into that asset, obviously in a bullish example again, and premium region means that people are more likely to sell that asset, more likely to not buy into that asset when it's in the premium ranging. So once again, it's simply based on expectations, that what you are expecting this to drop down into the discounted region, which will tell you that you are going to sell that currency pair right here, and you're going to keep your sales until the discounted region is getting reached on the 0.5 level. And below that region, you're going to assume that price is going to reverse here, and you're going to line up that perspective with the original expectation, and you're going to make entries based on the discounted pricing and based on the reversal confirmation coming from here, and based on the continuation that's going to come up to break the high point. Because more people bought into this asset on the discounted region, meaning the more people are buying into the asset, the more it will reach the high point of the previous external high. And obviously, in a counter example, in a short example, when price is moving in a nice bearish trend, you are pulling a Fibonacci from here to here, the discount will be, let me just pull the Fibonacci because it will be easier to explain, sorry. So the discount in this case will be above the 0.1, 0.5 level. So this will be the discounted region, and below that will be the premium pricing, because this is, the counter example. For a bullish example, below the 0.5 level, that will be the discount, above there will be the premium. In a bearish example, below there will be the premium, and above there will be the discount. So that is the difference, that how you use the premium and discount tool in between a bullish and a bearish example. But in the core, in a real nutshell, this is what premium and discount pricing means. And in this video, I just wanted you to understand that what it really means, what the theory is. And later on in the entry model videos, we're going to utilize on this tool and we're going to implement it into the trading plan. But once again, the purpose of this video was to understand what discount and premium pricing means, where people are more likely to buy into something and where people are more likely to sell something. So in the premium pricing, once again, people are not likely to buy into something and more likely to sell it down to the discount region. And in discount region, people are less likely to sell that asset, in a bullish example once again, and more likely to buy that asset. In a core, in a nutshell, this is what premium and discount means. And in later videos, we will break this down and we'll implement it into the trading plan. Cheers.